Hello my fellow freedom builders, and welcome back to the channel to a short video about Apple. Now, as you've seen on the thumbnail, the question is, could Apple drop 15 to 20%? And if you don't have time to watch the entire video, then I can give you the short answer. Yes, Apple could drop in price. Now, will it? Nobody knows. We never know what the investors choose to hype, but there is something wrong, in my opinion, in the way Apple is priced right now, and I think there is a larger potential for some drops than there are for actually huge price increases. Now, looking at the Apple shares just over time, let's have a quick look at the weekly chart here. We can see that investors have been used to some massive gains back from 2013 here. It was at 11, now we are at 182. There have been some splits and stuff, but that is a 1500% return here, so that is great. Just recently in 2023, where investors thought the market was a bit tough, we could see that with Fed starting to talk about potential rate cuts, we saw a very nice market here. And Apple was up 44%. Now, can that keep going? In my opinion, no. But let's have a look at why and what other people think about it. Because if we look at the current market situation for Apple, and I should say I'm not an expert here, I'm not even using Apple products myself, sorry to say so, but looking in here in Seeking Alpha, we can see that there are several sell or hold articles. Also a few buys, to be fair. What they are basically focusing on is that the iPhone business has likely reached its penetration ceiling, meaning that it is kind of limited as how much growth Apple can get from just selling their iPhones, and about, is it 50% of the revenue is from their phones. Now, some might say, yeah, well, it doesn't matter too much because they have built an ecosystem with the Apple store where you can buy all sorts of stuff, and yes, that is true. However, there are some potential court cases looming, some monopoly, some trust issues here, where they are actually saying, okay, they might have gotten too much power into this. They can completely control the app market. Okay, we might put a lid on their potential to move here. So there are some different worry points here that we could consider. You can go in there, you can read the stuff yourself. Now, there is another thing, or there are several other things, and that is that, for instance, on the Chinese market, we can see that Apple, that has a huge market in China, they are being squeezed a bit by Xiaomi, by Huawei, and so on. And you could say it's unfair. China is giving some favors to their own producers, but that is how it is. And we could see that Apple was actually forced to give some very rare discounts in China. Let's combine that with the overall economic situation in the world, saying that there are a push downwards. We just got the retail sales this morning from China. They showed that the retail sales are growing a lot less than they thought. The analysts thought. We can see that there are some signs of worry around the world. We can see that Europe is going into a recession. In my opinion, we will see deflation, meaning negative inflation in Europe here in 2024. We might see the same in United States, although they have somewhat more growth, but there is a lid on the growth around the world. And when there is that, when people are getting a bit scared, if there are a recession, then it might not be iPhones that people are prioritizing to buy. Anyway, let's have a quick look into MyStockScanner, where we like to watch the different stocks in there. And if we just take a quick look, and that is something I do like to look at if I am trying to evaluate what sort of price level a stock is at. If, for instance, we have a look back here from 2020, let's go in here and have a look at Apple from 2020. let's just zoom out a bit here. Let's just have a look from around here in the beginning of 2020. Since then, the Apple stock have grown around 150%. If we're looking at the general earnings, the earnings per share, that was in 2020 just around $3, and now it is just around $6. So the earnings have only gone up by 100%, but the price have gone up by 150%. Now that doesn't necessarily mean that the stock will drop. It just means that the stock price have gone up significantly more than the earnings have. And that means that for this price to be justified, and of course you could also always argue where should we count this growth from in stock prices, but if we should justify the current price level, there should be some massive growth potential in what we're looking into in the future. And no matter what analysts I am looking at, some are predicting a small drop in earnings per share this year. Some are predicting some growth here, but the growth is limited. We can also see here 2025. Average analysts are saying 8.5% in growth. So let's have a look. First of all, the price earning is in the area of 27 to 30, depending on what numbers you're looking at. If we're looking in the valuation chart here, and we are looking 3 earnings report into the future here, and let's say we are putting a 5%, and let's just be generous and say an 8% growth in 25-26 here, that earnings year here. If we are looking at a price earning at 30, then with the growth that is expected among the analysts, you could look into a growth in the Apple stock at around 15% altogether from now on until at the last quarter of 2026. So over the next about 3 years, you can look at around 15% in growth, which is basically the same as you can get if you buy a bond right now. And you could say, would you rather want a bond giving you 5% per year, or would you have a volatile stock where you're not completely certain what the future will give you? Well, that is of course completely up to you. But as you know, I do like to take a quick look at the estimates and then cut something off, because this is kind of what is expected, and it is rare that Apple is really exceeding massively, because so many analysts are looking at it, and there are no huge surprises. So let's just say that they're surprising negatively. Let's say that they are actually only getting 5% growth per year. Well, then you're doing 12% over the next 3 years. Now, the big point here, the big driver of the price is, of course, price earning, especially when you are way above 15, 20 in price earning. So right now, buying the Apple stock with a price earning around 30, that gives you a yield at around 3.5%, maybe 4% per year, because of the math in the price earning. However, when you're paying $30 for each $1 of profit, and that gives you just roughly 3.5% per year, and you can go out and get 4, 5, maybe even 6% on some bonds right now, then many investors that invest in Apple would kind of signal to the market and say, okay, well, when we can get almost double or at least 50% extra in yield just buying a bond than we can with Apple right now with a PE of 30, then we would actually want to pay a bit less in price earning. So let's say they agree to only paying a price earning of 25. With the growth we have put in right now, that would over the next 3 years give a drop in Apple price at around 7%. It could also be that investors are getting a bit more nervous and are doubting a bit more of the future of the Apple entire Apple market, and they are saying, okay, with 5 to 6% on bonds, we want at least 5% in yield when we calculate the Apple price earning, and a 5% yield equals a 20 in price earning, which, if Apple grows like we think it will, And if the investors are willing to pay a 20 PE, that would give you a drop in Apple prices of 25.4% over the next 3 years. Now, will this happen? No one knows, but this is pure math. Of course, it could be that Apple could grow their earnings by 20%. Okay, well, even there, if the investors, they demand 5% in yield, meaning a PE of 20, that would still make the Apple share drop by 15%. Now, how much would it take before this went positive? Well, we should get up in the 24-25 PE range before this one just goes into break even over the next 3 years. So, is Apple a good stock? Well, it's not paying too much out in dividends, so it's not something you should really go for just for the dividends. And to be honest, when I am evaluating what sort of stocks I should buy and then hold for the long term, I am normally not looking at 10, 20, 30 years ahead. Also because I'm 50 years old, so that doesn't make too much sense looking 30 years ahead right now. But I'm normally looking 2, 3, maybe 4 years ahead for some longer term holdings. And in this case, looking 3 years ahead, Apple is, in my book, definitely not the best pick right now. Now, could something happen? Yes, they could invent some AI revolutionary stuff that everyone is talking about or whatever, so that investors are willing to pay some more and they can grow their earnings more. But as of right now, with the growth we can see right now, with the product pipeline they have, and so on and so forth, on the different markets, I would definitely say Apple is not the right pick to make right now. Now, you can pick whatever stock you choose. This is not investment advice, so you can have your own strategy, your own risk management, whatever. And in your strategy, it might be that Apple is the best pick ever, and then feel free to buy it, of course. I'm just saying that from pure math, from expectations, and from what we can see in the market and what investors are willing to pay in price earning, there might be a significantly larger downwards potential in Apple than there is an upwards potential. All right, I hope this made sense. If you have some comments for it, feel free to put them in the comment section below. I am pretty sure that some of you will be mad at me for saying that Apple is not the best investment in the world, and feel free to comment. Keep your language decent though, and I will definitely answer you. That's all for now. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye.